Hi, I'm ReAnn Gonzalez with Edge Home Finance, and today we are going to talk about why does a mortgage payment jump up? Okay, so now let's get into it. If you close on a mortgage and have an escrow account, then your monthly payment will adjust annually when the servicing company does their annual review. RESPA requires that lenders analyze the escrow accounts of each borrower at least once a year to determine the appropriate target balance, to evaluate whether surpluses, shortages, or deficiencies exist, and to forecast the following year's monthly payments. Let's break this down a little further. An escrow account is where the lender holds your property tax payments and homeowners insurance payments, and once a year, on the due date, pay those bills on your property. Typically, if you have a government loan, FHA, VA, or USDA, and a conventional loan with less than 20% down, your payment will include 1/12 of the annual tax payment and 1/12 of the annual homeowners insurance. For example, if you buy a property and the annual taxes are $5,000, and annual homeowners insurance premium of $1,200, then your annual mortgage monthly payment will include the mortgage principal and interest, plus mortgage insurance if this applies, plus $416.67, which is 1/12 of the annual $5,000, plus $100, which is 1/12 of the annual $1,200 homeowners insurance premium. What happens is, if the taxes or insurance go up from year to year, then the lender will need to raise your monthly mortgage payment so that they have enough money to pay this annual bill. Many times what we see is a client may purchase a home with exemptions and they fail to file their homestead exemption. Then this leaves the appraisal district to raise the value with zero discounts, and the client's tax bill will go up quite a bit and cause a deficient escrow account. When an escrow account is deficient, the lender or servicer will advance the monies necessary to pay the bill, but then will double the monthly cost to the client for a minimum of 1 year to recoup the money they advance and to have enough money to pay the next year bills. We see this happen many times on new construction. If the escrow is started with a low tax escrow, typically on new construction, the property has been taxed on land only. Now that the property is completed, it will be taxed going forward on the improved value. I recommend to my clients, when the current tax bill is low, that they set some money aside so that we can apply additional money to the escrow account before the analysis happens, or to pay the extra money and have the lender apply it to escrow so that they do not end up with a large escrow shortage. Unfortunately, I have had clients who did not listen to me on filing the homestead exemption or applying extra money, and they usually call around April or May in a panic as their payment has increased by $200 or sometimes $400 or $500 per month, and they don't understand as they signed paperwork on a fixed rate mortgage. When you have a fixed rate mortgage, which is 98% of mortgage loans, the mortgage payment does not change for the term of the loan, but the monthly mortgage payment will increase or decrease depending on the escrow account. If your insurance premium increases, or the value of your home goes up, or if the city, county, school districts, etc. increase their taxes, then your payment will be adjusted to cover this. Also, if the lender or servicer happens to send you a check for several $100s and lowers your payment quite a bit, then you might want to give me a call so we can take a look at it, as you may need to send that money back or keep it in savings on hold for the future tax or insurance bill. I hope you found this information helpful. If you know of anyone who needs help with a mortgage, please share my YouTube channel with them, as my goal is to help as many people as I can achieve the American dream of homeownership. Lastly, if you have any questions and want to chat about your situation, please feel free to reach out to me at 915-478-1157 or apply at my link listed below. Thanks and have a great day. Bye.